Let's do it. All right, guys, good morning. Welcome aboard to the Morning Note. My name is Carlos Garcia, founder and CEO of GAR Capital. Just trying to get this up here for you so we can read it together on Bloomberg. Let me see if I can get this going. Back to where it was. Okay, let me just put it back here. This is the market blog from Bloomberg, so I can read you a couple things here and there. We'll go over the headlines this morning. Welcome aboard to the Morning Note. My name is Carlos Garcia, founder and CEO of GAR Capital. I said that already. Bottom right hand corner of your screen, a little black logo. Click on that. Turn on notifications, subscribe to our channel. Make sure to like our videos. Let's get to it. Let me go ahead and get the headlines for you. Let's go to mail. Okay, here is the notes. This is the CPI number. Consumer prices rise 0.6% month over month versus the estimate of 0.4%. September consumer prices 0.4% month over month. It's that 0.2%. So core at 0.6 versus a 0.4. The regular CPI is 0.4 versus 0.2. Weekless jobless claims 228,000. You can see it right here, 225,000. So here's your CPI number. Here's your core. September core CPI, we got that. Fed swaps fully priced 75 basis point in November. Remember, there's no price, there's no FOMC in October. Futures erased the increase that we had this morning, and the Fed's price in a policy rate of 4.85% by March 2023. That's the Fed rate that we're gonna have. We'll go over futures here in a second. Let's go over on what this means for the market. At least give you some context. This is from Bloomberg itself. It says it isn't that bad. Broadly, inflation is cooling. So again, something to see. We'll post this on IG. Markets were caught off guard by a hotter than expected CPI report, but the share of items running above their 5-year average has dramatically collapsed. Shelter remains sticky, rising 0.7%. Transportation and healthcare moved significantly higher. But looking at the full list components, the share of items running above 4% annualized or above their 5-year average just plunged to mid-40% from 70% in August. That's a steep drop. And then it's clear inflation remains too hot and core inflation will continue to stay elevated for some time, keeping the pressure on the Fed. But the measures above indicate inflation is broadly starting to cool, leaving just a few outliers driving the gains. Here we go. CPI surprises to the upside thanks to services. The US CPI data delivered another kick in the shins to asset markets, with the core reading rising greater than expected, 0.6% for the month and 6.6% for the year. Headline, also disappointed, rising 0.4%. Shelter prices remain elevated, rising 0.7% for the month, driving 0.8% rise in services generally. Core goods prices were unchanged for the month. A welcome change to the trend during COVID. Unfortunately, the nature of the service inflation is such that it tends to be stickier than goods. Obviously, all this represents a stern test of the thesis that the market will move disproportionately on a low figure as stock and bonds both gap lower. I would expect fixed income to at least rally back somewhat during the day. That's bonds. We'll take a look at that here in a second. But clearly, it's premature to bet on a moderation in the Fed's inflation rhetoric, meaning we're going to get higher rates. Treasury yields dollar jump on hot CPI. We saw it this morning. I tweeted that as well. Treasury yields jumped across the curve, led by the short end. After CPI came in hotter than expected, the dollar shot up and erased earlier gains. So again, still a lot of moving parts as we know, but inflation in some aspects are cooling. That's shown by the data. Is that enough to hang our hat on? Not really, because we still have the Fed that is still going to increase rates and go from there. So let me see if I can adjust this here. Oh man, I just wanted to adjust it for my, there we go. Let's see if I can get this fixed here. Let's see here, and I'll just close this a little bit. I hate when on Bloomberg you have to kind of expand the window and then kind of put it back. It's kind of a pain. So my apologies. I'm going to go ahead and move this. All right, there we go, finally. Okay, now let's get back to the equity markets. We'll go to desktop, make life easy. We'll go to Thinkorswim. Okay, so right now Dow was up 300 points this morning, now down 49, off the low slightly, 492. 306 points down for the Nasdaq, nearly 3%. 2% down for the S&P. Russell 2000 nearly 2% as well. Crude oil now back to 85. We were at 90 earlier this month. The Treasury 30-year yield rises to 4%, highest since 2011. So that just got that headline. Gasoline futures down 1.61%. And then we'll go to yields here in a bit. Let's go to the 2-year yields. Again, now above 4.5%. Remember, that was our resistance. So we also have the 10-year. Looked like a double top possibly. Now at 4%. So that broke out with the CPI number. So again, now we're at clean breakouts on both highs across the board. The volatility index is, I don't know what's happening to it, but it's frozen. So I don't know exactly what's happening in terms of the volatility index. The dollar index did reject 114. So again, that's where we are currently. Let's take a look at gold futures, down 1.32%. That's on the dollar. Silver down 2.26. That's the dollar. Gasoline and oil as well down because of the dollar. Euro dollar down 51 pips, 96.52, 96.52. 147.53 for the dollar yen. That's up 63 pips. Pound dollar was up a lot higher as they were talking about reversing that talk of the what is this called, the tax cuts in England. Pound dollar 111.88. How about Bitcoin? Broke that 18,300 level. Now we broke that log chart, 18,185, down 4.77%. Now you have to look at this very, very closely at the market. Ethereum at 1205. You're going to get higher rates as we go. It's not over. So again, we do have seasonality, of course, but now we're following the 2008 analog. Let's go to the daily. Now you start taking a look at what is your next support. Really, your next support is right here. You have until 33.88. That's the pre-COVID highs. So again, that should be your target if you're shorting right around 3,400. That's, again, that could be broken, but again, that would be the target. Would I rush in this morning and go ahead and short? I don't have any open short positions or anything like that at all, or options positions open. So again, just really watching to see if, do we continue down, maybe get some puts, but they're going to be very expensive moving forward. You're buying insurance on a burning house at this point. So again, if we get a little bit of a pop, that may be something to short. If that's the case, you're kind of looking for a pop to or a rip to sell. But at this juncture, 3,500. I mean, if that breaks, then you have to. That's probably, you're looking at shorting across the board. You're also seeing yesterday that we had higher. The gainers of the day yesterday were the high beta names, the upstarts, the Palantirs, those names. ARKK were up on the day. Since the Nasdaq, I believe, was basically flat. So again, those are going to reverse. So again, if you're looking to short this morning, it's going to be the high beta names, those high growth names that did very well in the pandemic. They're the ones that are going to fall this morning with higher rates. So again, looking at the broader indices, that's going to be a tough trek unless you break 3,500 S&P futures. Just for the simple fact that I believe that is the gap fill on SPX. Let's go ahead and bring up SPX together, and then we'll answer some questions. Let's go to the daily. SPX, there is no gap, but again, your next, let me see here if I can bring this up. A 3-week chart. This is an old Fibonacci level. So again, looking at Fibonacci level, we broke below. Remember, look at the weekly on S&P. Now we're at 3,500. That's where more likely we're going to open. So again, now we broke that 200 MA. The last time we broke that was COVID. So again, how much did we break from that at that time? We were at what, 3,600? Now we went to 2,100, so another 500 points. That'll get us to around 3,000. That seems to be, that could be that big last level of defense. But really, if I'm looking at a short term just to trade it, 33.92. Now here's something that's extremely important. Inflation is not going away. We know that, obviously. We know that the Fed is going to increase rates. That's going to add pressure on assets until they pivot. So again, Bitcoin, crypto, stocks. If you need the cash immediately, you need to sell immediately. That's basically what you need to do. If you're a long-term investor in retirement and all that, none of this really matters. Your dollar cost averaging anyways. I'm DCAing today SPY-G, so I buy every week. So again, still just going over time, buying over time. But again, if you're somebody that needs cash for whatever reason and you have assets like a Bitcoin or crypto, tech stocks or what have you, or stock market, it's still money. If you need it, just take it. If you need it. If you don't need it, if you're not retiring within 5 years, if you don't need the money within 5 years, none of this really matters at this very juncture, at least in the long-term sense. You're just accumulating anyways. So again, there is very multiple ways to see the price action of the market. The good news, at least there's some volatility, good for trading. but at least for investing, this is all pain in the ass ugliness that you saw in 2020, that you saw in 2018, that you saw in 2014, that you saw in 2009, 2008. So again, every few years you get this craziness, this madness. On the 15th, in 2 days, GAR Capital is going to turn 8 years old, and we've been through already 3 bear markets, and that's just actually 4 bear markets in 8 years. That's an average of a bear market every 2 years. Not easy to deal with, but you just get used to it, and then you just kind of have to ride the storm. I kind of equate it to being in a hurricane, and all you can do is prepare for it. You can't really do much other than just prepare for the damage than it is to prevent a hurricane, because that's not exactly what you do if you're Floridian. Can't really prevent it. Let's answer some questions. Good morning. This is Whale asking, is the USD bullish? Well, I like the dollar index, again, especially if you're trading, but you need to break 114 on the index. So once 114 breaks, yes, but as of right now, we're rejecting it, and that's a key level, 114. Last thing I want to do is get into dollar long positions, and that rejects back down to 113, and then we're kind of holding that. But again, in terms of the dollar to travel bullish, absolutely. The dollar is continuing to grind higher. Let's just call it what it is. The reserve currency is still the most important currency on planet Earth. Look at gold. Gold down 1.24%. Gold is below their 200 MA on the weekly. Just like Bitcoin is not an inflation hedge, gold is not an inflation hedge. Silver is not an inflation hedge. Commodities are not an inflation hedge. The only inflation hedge right now is the dollar. All the printing of the dollar, yet the dollar is very strong. That just confirms to you that the United States economy is still the best in the neighborhood, the best on the planet. The problem is that really doesn't give us a lot of solace when everyone else is under disaster mode at their point. Pretty much every country is hurting with inflation. The United States still consuming, still going out, still doing their thing. Airports are packed, malls are packed, people are still consuming. The only way you get inflation really to come down, guys, you need employment to drop. You need people to not work. And that sucks to even say. Good morning, Carlos. What's a good price to buy Tesla stock? Thank you. Tesla right now I would not buy because you still have more downside. But again, if you're looking for a price, and it's going to be an ugly one to eat, 156.77, that 17, that's your 200 in the weekly. That's really the last kind of level of support for the name Tesla. I would not be running and buying here unless you are dollar cost averaging over time. But running out to buy this, no, it's just not worth it. Morning, Carlos. How did you land on SPY-G each week versus something like VOO? There wasn't really a difference. VOO is obviously the broad-based stock index. SPY-G is just forward more on growth itself. So again, I just wanted more growth over time. Did I buy any Google? I did not buy any Google as of yet. No. Again, just glad I didn't. Just waiting around and seeing if we get any kind of change in terms of the market, because of right now, 3,400 is still in focus here. And if we continue to go lower, no point of buying here unless you're dollar cost averaging over time. But again, to put in a position at this point, not the smartest idea, because now we're just going to continue to go higher. The only solace I can find right now, at least is the 10-year is, well, it did break the 4%. Yeah, I mean, we're above across the board. The VIX is just muted, which is strange. I guess the only solace I can kind of give is that this doesn't last forever. Are we near capitulation? That's what I'm looking for. Are we to the point that fear just takes over? Everyone's terrified. March 2020, December 2018, March 2009, October 2008, all those times throughout our history, the last couple of years, you've always had that last stand of capitulation. Like everyone throws their hands up and gives up, and that's when things start to change. But as of right now, I mean, I guess unless you get unemployment to go higher and kill demand, you're just going to keep grinding and grinding and grinding and grinding until the Fed changes their tune. But again, they're going to keep raising and keep raising until inflation goes down. Living in Canada, the exchange rate to buy U.S. stock is ridiculous. I want to add heavy, however, the U.S. dollar is significant. Yeah, that's the problem. The dollar is too strong, and how do you price American stocks? In dollars. So that's the issue. You have the United States, where their currency is expensive relative to the world, and yet prices are already higher in the United States as it is for goods and services. Mostly services, as we went over the numbers together. The services are a little more sticky in terms of inflation, but yet good prices are coming down. I mean, imagine, guys, inflation is still high, even with crude oil falling nearly 38% from its peak, commodities falling, and we still haven't got it. Say for what it is. I mean, I'm going to give you the perspective. The economy, in a sense, people are just continuing to consume. It's strong for the regular consumer. It's still strong. For in terms of the stock market, that's a different story. But in terms of people going out to buy stuff, going to the grocery store, going to the theme parks, going to the movies, going to the wherever, they're still consuming. I was just in Las Vegas. That place was packed. You would not think that we were in a recession the way people are out doing things. Now, granted, that could be a little bit of a hint. If you guys remember 2008, The Big Short, they went to Vegas too, and people were still out doing their thing as well. So, obviously that can change. But again, looking forward, really the perspective here is that it's just too much demand. We're not enough supply, and we need more workers. That's really it. We don't have enough workers. We're dangerously underemployed in the United States. Labor market is still very strong. So that means people that are working can negotiate for price hikes or rising wages, and then they can just leave to different companies as they go along. So it's a tough one. I mean, how would you want inflation to cool? You want people to get laid off? Maybe. Do you need people to get fired? Do you need people to be under depression mode, to not spend, and that's the only way we can get out of it? Is that really what we're about? We're going to cut our nose to spite our face? That has to be done. And if not, then we're just going to have high prices forever, because look at the PlayStation 5, for example. We put them on the shelves and people still want to buy them. I got an email in the mail, last night saying that for PlayStation, they're going to do another release of the PlayStation consoles. So, and that's a waiting list. So, I mean, it's strange times, man. You have so many people wanting to demand goods and services, yet inflation is soaring, and that's not stopping anyone from doing anything. What can you do? Audio cut out. No, I don't have my AirPods. I still left it at Nick's office, and I have my family here. So again, I'm using the speaker here. My apology. I love sales. I'm in on puts. What should I do today? In puts, what I would do, again, just watch. It depends on your expiry. If you're looking at the expiry for a Friday, take it, leave a runner, see where you go from there. Again, any of this can flip immediately. I don't see that it's flipping now, obviously. Could we get 1,000-point day to the downside? Sure, but we just have to wait it out. Unfortunately, I'm looking at the VIX. VIX is not even doing anything, which is interesting. And I'm looking at yields. Yields are continuing to pop. So again, stocks are going to continue lower. 3,500 is my first support. If that breaks, we'd have to probably go short here, and we'll see where we go from there. But with that being said, the boot camp is coming in November. Let me see if I have the dates on it. Give me a second so I can give it to you. I was going to do a video, an IG live for you guys talking about the boot camp in Miami. I'll be there with the team. I'll be there with Kevin, Laura, and Anthony. And we're going to be talking about the markets, kind of positioning ourselves and talking about what to do moving forward. We'll probably talk together about building certain portfolios that or a couple of names that you like. We'll do some building workshop, building exercises. We'll have actual printouts and going over charts together, so we can start building on preparing ourselves for what's to come in the future if there is opportunities, because that's really all it is all opportunities if you're long term anyways. Here's some of the details. Again, it's going to be in Doral, Florida, November 18th to the 20th. It's going to be a 10-hour total, 3.5 or well, not even 3 hours a day. We're going to be talking. It's going to fly by fast because it's not going to be death by PowerPoint. We're going to discuss many things of the market, especially macro. Very important. We'll have market foundations day 1, investments day 2, and options, how to trade options the way we do. And then we'll do a walkthrough of our services. You'll also, if you do come in on board, you get 3 months access to the Discord community. And then we're going to have a cocktail hour, man. We're going to have some drinks, talk about the markets, talk about whatever you want to talk about. It should be fun. It's a way for all of us to meet you guys, the fans, in person in Doral. Again, I'll give you guys more details as we go along. When I do an Instagram live, I'll explain all the details and we'll post more about it. I've been trying to do this in Las Vegas, but again, the logistics are kind of a mess. Again, flights are kind of expensive for everybody, and I get that. So again, Miami is a lot of our followers in the South Florida area. Again, it's a shorter drive to go to Doral. It's a nice area. We have an office there. So again, that's coming up October 18th, 19th, and the 20th. If you guys are interested, 18th to the 20th, excuse me. If you're interested, make sure to DM us at GAR Capital on Instagram, or you can message Kevin as well. Kev GAR Capital is his screenshot. My bad for audio cutout. You're good, Carlos. You're welcome, man. You're welcome. And he goes, short high text for today. that would be the first thing I'm looking for, is the high beta techs, the ones that have grown, the names, the stay-at-home names, let's just call it, the upstarts of the world, that sort of thing. They're probably going to be taking a hit today, again, with higher rates. We record this for us in California. In regards to the actual, what do you call this? The meeting or whatever the boot camp that we're going to do. We're going to have a videographer. I don't know if it's going to be recorded or live streamed. If it is recorded, we'll do bits and pieces. But for the most part, it's going to be more of a being in person. I mean, the past 2 years, everyone has been on front of a camera on Zoom. It's a way to finally get us together. If this works out, great. And next year we can have a really bigger conference where we all just get together and hang out and have some fun. The idea is I really want to meet you guys. I want to meet the fans. I want to meet our fellow traders. People are interested in stuff. It's fun to meet others. I've met many clients through the years that we've been open in 8 years. So again, we're kind of doing this boot camp because it's the 8th birthday of GAR Capital on the 15th. That's a Sunday. That's a Saturday. So we're excited to do this boot camp, get together, a workshop together, where we can talk about the markets, answer your questions in person. And again, I'm kind of looking forward to the cocktail hour. Have a couple of drinks with you guys. Should be a blast. I hope to see you guys there. We'll get more details. We'll give you more details as we go, but here's the information now. Again, 18th to the 20th. If you are interested, make sure to DM Kevin at GAR Capital, or at KEV GAR Capital on Instagram. That's probably the best way to reach us. Or you can always email us, contact@garcapitalfx.com, garcapital@gmail.com. Many ways to reach us as always, but I'm kind of pumped. We're about a month away from the workshop, and we're going to talk a lot of macro, take a lot of notes. You can record it, audio record it, whatever you want. We're going to work with you. Bring your laptops, bring your tablets. It's going to be fun. We have a lot to go over, and what a better time to talk about the market than when everyone is basically saying the world's over, or CPI and inflation is just still rising. Again, this is what we want to talk about. When things are tough, how do we move forward? And I think that's going to be the fun part of the get-together and the workshop. I mean, bring your notes, bring your questions, and we'll have some catering. We'll have some food there as well, so you guys are not going to starve. It should be fun. I hope to see you guys there. Have a great rest of your morning. Again, nothing open right now. Let's see where we get in the morning at the open. But stocks are very red. Do we continue down below 3,500, or do we kind of just chop around here for a little bit? Remains to be seen. Have a great rest of your morning. I will see you guys tomorrow for the morning note. Cheers.